Hello, and welcome to Pro Trader Strategies Market Commentary for Tuesday, June the 20th. My name's Eric Wilkinson. Some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, we're here to teach you some different strategies you can implement into your portfolios, but please do that in your own way. The reason why I can't give you a recommendation on a particular stock or strategy is because I don't know your risk parameters. I don't know what's in your portfolios, and therefore what I'm doing could be counterintuitive to what you are already doing. And please remember that past performance of any trading system or methodology is not necessarily indicative of future results. Having that out of the way, let's get it on. The economic data today, pretty light for all intents and purposes, but we do have Fed governors speaking. We have Fisher, who already spoke early this morning, probably overseas, and then later on this afternoon, right before the market closes, we have Kaplan speaking. Other than that, here in the United States, no economic data being released, but tomorrow we do get existing home sales and crude oil inventories, which could be pretty important. Having all that out of the way, we have crude oil continuing to cruise lower, came down and tested that $43 a barrel mark that I've been talking about. That's where I think that we are going to be finding support. So I redrew my Fibonacci numbers because I did it pretty sloppy, which is generally the case. I really can't stand just trying to find that exact price. As you can see, I pretty much gave up on trying to find that 39.19 area. Just went with 39.17, but I threw in this line here, which is right there at that $43 a barrel mark, because as you can see, it's acted as support several times in the past. Should act as support again here today, and we did find that broke through it for just for a second. I think the low is 42.94, so broke through it a little bit, now back above it. But that is going to act as the support. Bulls are going to want to really defend that. Even I think it's going to stand out more than even this fib line. But we got down there to test that. So now I'm looking actually to cover my XOP for a 50% of max profit. If you remember, I have on the July 33 calls, originally sold those for around 56 cents, trying to buy them back for 28 cents. Right now it's trading about a nickel higher. So any more of a sell-off today, I should be able to get those hopefully, but I have that as a working order, just so you know, looking to get out at 50% of my max profit, right in line with my rules. Gold futures coming down, testing that 200-day moving average and acting as support as it should. The overall market's still going to be kind of held up. It's a little bit of support as the overall equities are looking a little mixed. We have had the Dow make a historical high today, but is slightly in negative territory. But I think that you're going to see gold futures get held up a little bit right now. Bonds up 24 ticks, actually 8 ticks shy of a point, but bonds acting really strong, and that 200-day moving average really acting as support. So we continue to see this bullishness in bonds. We could easily see this market cross. I'm not hearing anything hawkish necessarily out of the Fed or anything like that, or any kind of Fed speak that would cause the bonds to really rally. And since we haven't had economic data today, it's a little bit bizarre to me that the bonds are being as strong as they are for the last several weeks. Then on to the Dow Jones. As you can see, we created a new historical high today. That is intraday during the day session. Now that we've gotten above that value area high, really going to act as support, but gives us traders a good line in the sand to see when we're going to see a little bit more bearishness. If we come down and settle below this value area high, that is going to be the time to look to start shorting this market. But the Dow Jones right now only off about 9 points. Then we have the NASDAQ. It's been the one that's kind of been lagging lately, if you will, down 12 points, but yesterday was up almost 100 points, which is a pretty big move for the NASDAQ, although this day it was down quite a bit, but that was one of the bigger moves that we've seen in quite some time. But 100-point move in the NASDAQ's nice healthy move, if you will. But today finding a little bit of profit taking going on possibly. But the overall equities are negative, so that's to be seen. I mean, that's why we're seeing the bonds up. It's because the Nasdaq, the Dow, the S&Ps, most equities across the board are in negative territory today, and we have the E-mini S&Ps down about 6 points on the day. We can look at the daily chart. We still had that intraday high in the E-mini S&Ps during the day session, so that is a good print. We've bettered that since my yesterday's daily market commentary by a little bit throughout towards the end of the day. But today, overall market very bearish. Like I said, it could be profit taking, but there is a little bit of uncertainty coming out in and around the markets. Now, I talked about covering that XOP. Hasn't gotten hit yet, still about a nickel away. But XLK yesterday I did cover. Covered this towards the end of the day. And XLK, if you remember, I had on the July 54 puts. Originally sold those for 64 cents. Bought them back for 32 cents yesterday. Had that working order in there to get out for 50% of my max profit and got hit on it. The other trade that I talked about having on was Procter & Gamble. Now I still have on the short put a long put spread in Procter & Gamble, but this strategy really worked out nicely in accordance to my Ozo Local, or the double bear spread, because I was able to kind of jigger this where I have less risk on the upside. And I usually do this as equal distance, but they were going to give me a credit for taking less risk on the upside. So with that, I decided to put that on, left it in throughout the day. And as you can see, as the market rallied, I got hit on it. Today, you could probably do it even better, maybe even at better levels, but I have on with Procter & Gamble. I have on enough Procter & Gamble, I should say, so I'm going to stick with that right now. And in Procter & Gamble, what I had done in there was gone into the September, and I bought the 85 puts and then sold the 80 puts to define that risk. Now, I had to pay a debit for that, so in order to finance that, I went in and sold the 92.5 calls and then bought the 95 calls to define that risk. Now, so if you look at it, the 80-85 put spread, which is where I'm going to make my money if the market goes that direction, is 5 ticks wide. Now my call spread on the upside is only 2.5 ticks wide, which is less. So I'm risking less on my short call spread than I am able to make with my long call spread. So that really worked out nicely, and I collected 2 cents credit for that. So risking half as much as I'm able to make today doesn't look so good, but I'm looking at this value area high as acting as resistance. This is the doji that really wanted me to get involved in this. Didn't necessarily get confirmed, but I don't think that we're out of the woods yet on the downside with Procter & Gamble. So I'm going to hold on to that a little bit longer. I haven't decided whether I'm going to pull the ripcord on that long call spread, that long put spread that I have on. That's a separate order from the rest of them. I have on the 85-90 put spread in there, so where I'm short the 85 puts and long the 90 puts. Now, obviously, now that we're trading above 90, that doesn't look so great, but looking for a bit of a pullback, and hopefully we can get at least down to that 85 puts, which would really start looking good. So for the whole entirety of this strategy, so that would get that 50-day and cross over the 200-day. There would be a lot of good things going on with that trade. Also, I'm looking to get out of my target trade. It's getting a little bit away from me. I'm actually about 3 cents away right now, but target's off on the day. Working the July 48 puts that I originally sold for, I think, 56 cents. I'm trying to get out for 28 cents, which is about 50% of my max profit on that. It's trading around 33-ish, I think, or that would be about the mid market. And then the other trade that I'm looking to get out of is Applied Material, ticker symbol AMAT. And now on this trade also, I have on the July 40 puts that I'm short. Originally sold those for around 50 cents or so. This market's kind of getting away from me. I'm going to be looking to cover this though, probably today. Right now I'm working a 22-cent bid. It's trading around 30. I might not take 50% of my max profit on this one, as it does not look very healthy in a sense after that big sell-off there, and it's just continuing to grind away to the downside. I just don't want to see it break through this 50-day moving average and lose some of my profits that I've accrued on that theta decay in there. All right, so that's all I've got for you guys today. I haven't added any positions as of yet today, but looking at a couple of different things, and I'll keep you posted on that. Friday's webinar, we're going to be doing it on the poor man's covered call. So for some of you guys out there that have smaller accounts, one of the biggest problems is trying to diversify throughout a lot of different stocks if you like to be long stocks. I'm going to show you a way that you can use less margin and participate on the upside in this, and it's going to have a synthetic put attached to it. So it's like having long covered call strategy, but you're going to have a synthetic put in there that doesn't cost you money like it would if you were to have a stock with a put in there, so to protect your downside. And I'm going to show you how to build that out on Friday, so go to protraderstrategies.com and sign up for that. If you can't take that, take it easy.